good morning. Good morning to the students here in the classroom, and good morning to the 30 students that are at home. First of all, yesterday some of you had the pre-course exam. My colleague is going to publish the results. At the end, all the students passed the exam. Even if for some of you, I prefer to give the information now, so in this way you are focused on the lecture, otherwise you think and so on. It's not a good idea. So all the students passed the exam, even if for some of you, 4 students, if I'm not wrong, the result is a little bit below the 24, that is the minimum threshold. So we decided yesterday to admit all the students to the midterm, but these 4 or 5 students, I don't remember exactly the number, will receive a personal email just to highlight that the background in accounting is very, very weak. And so probably they need to make more effort in order to be prepared for the midterm. Okay? But this is for sure a good news. Now, you did everything, so the pre-course test is passed. Now you can focus on the exam. Unfortunately for you, but also for me, for a certain point of view, the exam is scheduled for the next Friday. So it's very, very close. So pay attention, study, make questions. This afternoon, exercise hours. I strongly suggest you, as I told you yesterday, to read the consolidated financial statements and to ask whatever you want, okay? Because we can help you, but now when you prepare the presentation. And then I would like to know if there are some questions about lease, and in particular the accounting for leasing. Any questions? Is there any volunteer in order to recap the accounting treatment for lease in the lessee financial statements? Any volunteer? Here in the classroom or someone at home? For example, at home, of course I don't know you, so it's just random. Giovanni Cotone, are you there? Giovanni? No, the first attempt went bad. Federica Mariuzzo, are you there? It's very difficult for me. I understand for you, but also for me. Erika Aquilano? No one is. Okay, Erika. No. So, since it's very difficult with the students at home, I asked for a volunteer in the classroom. It's not a problem, as I told you the first week. I don't know your names, and I can assure you that what you tell here has no consequences on your final grade. in particular if it is wrong.
The receipt is a simple accounting model. In the asset, there is the right of use asset, and the liability, the receipt liability.
Okay. For the receipt, the accounting model is just one accounting model. So the distinction between operating and finance leases doesn't matter for the lessee. What is important is to verify that the contract is a lease. If a contract is a lease, the company has a commitment in order to pay the future installments. And for this reason, the lease liability must be accounted for, must be recognized. Of course, the company has a lease liability because the company is obtaining the right to use an asset for a certain period of time. Very good. The colleague, do you remember how the lease liability is computed?
First, we need to calculate the present value, and then we can understand the lease liability, the number of that, and then we need to also calculate the depreciation.
Okay. What step by step? Okay. The first step is, as you have, it's right what you said. That is that it is necessary to compute the present value. Okay? In order to compute the present value, you need two things. First, the future installments to be discounted.
And the interest rate.
And second, the discount rate, the interest rate. Since it's very difficult to obtain an implicit interest rate, because it's very, very difficult, this is possible only for very particular contract. IFRS 16 states that the company has to estimate its own incremental interest rate for borrowings. And yesterday we discussed this topic, and I said that it depends on the situation of the company in terms of debt. It depends on the currency. It depends on the maturity, so the lease term. So we discount the lease payments, and we obtain the amount of the lease liability. And this is the lease liability. What about the right of use asset?
Right of use asset is lease liability plus dismantling cost and plus
It's right, so the amount of the lease liability, the amount of the right of use asset is equal to the initial amount of the lease liability plus the dismantling cost, the estimate of the dismantling cost.
Direct cost if it's attributed to it.
If there are direct costs related to the lease, but more important and more frequent, the right of use asset includes also all the payments made at or before the commencement date. Okay? So, this way the company recognizes a lease liability and a right of use asset. Once recognized, the two, of course, are measured in completely different ways, because, as your colleague has started before to discuss, the right of use asset must be depreciated, and if it is the case, also impaired. Okay? On the other hand, the lease liability is accounted for as all the liabilities, so the payments are divided into two parts: the interest rate and the reimbursement of the principal. Okay? This is very important. Keep in mind that this accounting treatment for lessee is mandatory only starting from 2019, since until 2018, the accounting form was different, was completely different, and in particular, the distinction between finance and operating lease was relevant in the past. Okay? So the new accounting model is mandatory starting from 2019. And the reasons that pushed the board to introduce this model is because it's very difficult to separate, to classify in some particular situations a lease as operating or finance. And for the lessee, the information about the commitments, so at the end the debt of the lease, is very, very important. So keep in mind that the starting point in order to account for a lease is always the lease liability. This was the goal of the board when the accounting standard about lease was reviewed, to oblige companies to recognize the lease liability for all the lease contracts. Yesterday, we had a look at E&I financial statements, and we saw that in E&I, the lease is used for very important asset with a huge amount of asset. The vessel, do you remember? So it is not the same for all the industries as you can imagine. I don't know if you know Reply. Reply is a very important Italian company based here in Turin. If I well remember, the turnover is higher than 1 billion euros and operates in the ICT field with providing services linked to the ICT, information system and so on. For Reply, yes, there are leases, but they are not so significant. Some buildings, but buildings are just for the headquarters for administrative purposes. It's a service company. It's not a manufacturing company. Okay? There are some cars used by the employees and few things. But if you read, for example, Moncler or other companies that operates in the luxury industry, since they use the shops all around the world, and companies like Moncler or Bulgari or the very well-known, important known Louis Vuitton also, Dior and so on, Brunello Cucinelli, if we want to stay in Italy, they don't rent building in the neighborhoods. They rent buildings in the downtown of very expensive cities. New York, Milan, Paris, Hong Kong, Beijing, and so on. So starting from 2019, Moncler and companies like Moncler have been obliged to recognize a lease liability for all the contract in order to rent the shops around the world. Shops that are located in New York, Los Angeles, Milan, Paris, London, and so on. So with very, very expensive rents. So if you have a look at this type of companies, you can immediately understand that for this type of companies, the leases are very, very important. And the impact of the new standard has been disruptive. If you look at Moncler, for example, before IFRS 16, the only financial debts, Moncler did not have financial debts. So Moncler is a very is a company with a high profitability that is able to generate a lot of cash. So Moncler doesn't have financial liabilities, but only lease liability because of its industry. Okay? So again, now that you read the consolidated financial statements for your project work, you need to understand if for the company assigned, the leases are significant or not. And they are significant in companies that sells directly to the consumers, like Moncler, for example, Autogrill, for example, Amplifon, another Italian company, and so on. Or they are very important for companies, for example, all the airline companies, because they rent the aircraft. So two different, completely different situations. And in the middle, a lot of other companies for them, leases are simply some buildings and cars. Is this clear for everybody? So this is very important, a very disruptive standard with a lot of consequences, not only in the numbers, in the figures, but also from an administrative point of view, in order to identify all the lease contracts that are a lot. Yesterday then, we discussed also the fact of the lessor. For the lessor, the distinction between finance and operating lease is relevant. And for this reason, look at this slide. The lessor has to derecognize the asset and recognizes a receivable when the lease is a finance lease. Because a finance lease transfers the risks and rewards of the ownership to the lessee. Whereas for the operating lease, the asset, the building, the vessel, or whatever, is maintained in the financial statements of the lessor and depreciated. The installments collected, because the lessors collects money, the installment collected are recognized as income in the income statement. Okay? Yesterday we discussed the definition of lease, the classification better between finance and operating lease, and we focused on the analysis of the lease term. Yesterday I told you that under IFRS there is a general principle that is a lease, is a finance lease, is the lease term covers the major part of the useful economic life of the asset. And then I told you that under US GAAP there is at the end an accounting treatment that is very similar, but rule-based. So US GAAP, that in the US standard, the reason written a lease is a finance lease, it covers the majority of the lease term. There is written a lease is a finance lease if the lease term covers at least 75% of the economic life of the asset. Okay? Then the last thing, but it's just to a reminder, because we will discuss again this part. Okay? Lessor, always lessor. It could happen that the lessor is also the manufacturer of the asset. Think about Airbus and Boeing. Okay? Airbus and Boeing are the two manufacturers of aircraft, the two most important manufacturers of aircraft. They manufacture aircraft. They can sell the aircraft, or sometimes they sign with their customers lease agreements. Okay. If I'm not wrong, some days ago, ITA, that is the new company resulting from Alitalia, so the Italian airline companies, announced to an agreement, if I'm not wrong, with Airbus in order to buy some aircraft and to lease some other aircraft. Okay? So for Airbus, it is important to understand the type of lease, because aircraft is the manufacturer, but in this case is also the lessor. Okay? And so it's the accounting for is a little bit more complex, because Airbus doesn't buy the aircraft from another company. The product sold is manufactured directly by the company. So it's a little bit more complex, but also for the lessor, also for aircraft, for Airbus, it is important to classify this agreement as finance or as operating. We will discuss again a little bit this topic. We start today with the analysis of IFRS 15 revenue recognition, because as you can imagine, if Airbus is the manufacturer of the product of the airplanes, Airbus has to verify if the contract is a sale or if the contract is a lease. But at the end, it's always a matter of recognizing a revenue. Okay? So this is just a reminder. Just to remind you that it could happen that the manufacturer of the goods is also the lessor. So it is in this case necessary to put together different standards. IFRS 15 revenue recognition and IFRS 16 leases. Okay? But at the end, anyway, it is necessary to distinguish between finance and operating lease. This situation could happen also for the car makers. It is quite common for car makers to offer the possibility, instead of buying the car, it's possible to rent the car. Sometimes it is possible to rent the car using a specialized company, but at the end, more or less, all the car makers offer the possibility to rent directly the car through the group. This is FCA. And if we go to page 210, here there is the explanation, the description of leases made by FCA. FCA is LSE, of course, but FCA is also a lessor. So the long part of the description is dedicated to FCA as a lessee, but it happens also that FCA can act as a lessor. And read here the first sentence. When FCA is a lessor, FCA has to verify if the lease is a finance lease or an operating lease. And in order to make this classification, FCA, of course, makes a general assessment of risk and rewards. The definition of finance lease, a lease that transfers risk and rewards of the ownership. But look at the last sentence. Read this last sentence. The first part is of the previous sentence, highlighted in pink. Okay, it's a general statement. In yellow, there is a very specific information. As part of this assessment means the analysis of risk and rewards in order to verify if the lease is a finance or operating. The FCA group considered certain indicators, such as whether the lease was for the major part of the economic life of the asset. So yesterday I told you that there are a lot of indicators that can be used in order to verify if a lease is a finance or operating lease. But the most common indicator used by companies is the analysis of the lease term compared to the economic useful life of the asset. And it's exactly what is exactly the indicators used by